right, good morning, everybody. Sorry for being a little bit late. I had to figure out some technical problems. But yeah, hopefully you guys have had a good weekend. Hopefully you were safe last week. We're headed into this coming week, which is going to be the end of August. So it's the last week of August. So remember, the first week of any month, you got to think of power three. Every new month you go into, every week you go into, every day. So going into this week, it's going to be the end of the month of August, thankfully. So yeah, hopefully you didn't overdo it, because we're going to have some pretty dynamic price delivery. We have a lot to talk about in terms of the interest rates, what the impact's going to be, what we can expect. But yeah, we're going to go into a pretty exciting phase of the year. I feel like a lot of things are going to take place. There is uncertainty, right? Because of wars and all that. But, like I got done talking about with my private group the other day, it's unfortunate, but when world events, when there's chaos happening, when things are, exploding, right? Uncertainty is high. It opens up a lot of opportunities for traders, because that means volatility. Okay, but you have to know obviously what you're doing to be able to take advantage of it and not get wrecked. Okay, so yeah, as always, right, we're going to basically just talk about our weekly process, higher time frame analysis. We're going to observe the news here in a minute, and we'll talk about everything else in between. And then, like I said, I'll mention stuff about the interest rates in a little bit. Okay, so the news this week, we have a pretty busy news schedule. So that may present us with something interesting throughout the week. Okay, so think power three. So Sunday, Monday is consolidation, manipulation. Tuesday, Wednesday is generally expansion. Sometimes the manipulation will lean into that, into a little bit beyond Tuesday. And then, of course, we have Thursday and Friday, which if we hit a higher time frame PD array and it's one-sided, we can have a very similar response to the aggressive move we saw this past week. Okay, so yeah, we'll think power three to start the week, right? We'll see what happens. These aren't major news events. It'll still have volatility, but the thing is, we're at the end of the month, so your expectations should be dropped. When we're at the beginning of a month, the first week, we have to think manipulation, consolidation, setup, liquidity, right? To frame out basically, or set up smart money with, decent areas to take an execution and position for the month. Okay, and the second and third week is generally the most exciting within a month. And then the final week, which is what we're going into this time, in this coming week, you got to lower your expectations. So the first week and the last week of the overall month, you got to think of it similarly to how you think about the daily range, because or the weekly range, right? Because power three is present on every time frame, every perspective. So, and it just goes from time frame to time frame to time frame, and we have the larger picture on the larger view, like the monthly view or the quarterly view, all the way down to the lower view, which is working within that narrative. Okay, so expectations are going to be low this week. We have kind of rebounded from the decline, which we'll talk about here in a little bit. There's a lot to discuss in terms of what's taking place. But of course, when we do these weekly calls, we got to set the stage for what's ahead of us and what the conditions are, and then look at the news and go off of what's being presented. Okay. So yeah, hopefully that makes sense. Expectation, like I said, is going to be minimized this week, 20 to 30 points, 1 to 2 trades a day, preferably on Tuesday, Thursday, and Friday. Okay, Wednesday may not really do much. We'll see what Monday and Tuesday does. But I would, I'm going to be very light-handed when it comes to Monday's trading and Wednesday's trading, especially because it's the end of the month. Okay, so August has definitely been a testy month. I've got a lot of messages about, people blowing their accounts because they're just not following instructions. They're not listening to me or ICT or anybody else. And, they're trying to hurry up and doing that without understanding that certain times of the year are less favorable, and just trying to force your will in the market because you're sitting on the chart and you should get a trade just because you're sitting there. It just, the mindset wrecks you, and seasoned traders don't think that way. All right, so even if you're not a seasoned trader, you don't have a couple years yet. You still want to make sure you're considering the right perspectives when you're exposed to them, because technicals are great, but if the conditions are sloppy, if you're in a consolidation and you've never managed consolidation, or you've never seen a quarterly shift, or you've never experienced a changing condition throughout the year because of seasonality, you can get caught up in times when if you look back after you have some experience, you'll just wish just wish that you never really would have participated the way you did. It doesn't mean be fearful when times slow down or are a little bit more difficult. It just means you have to adjust your risk profile. But if you don't know that things change sometimes, you're not going to be able to be conscious of the fact that you need to change your risk profile here and there for different circumstances. Okay. So yeah, that's some of my opinions on the news this week. Again, think Power 3, and we'll see what happens going into Tuesday. Just the rest of the week. Okay. So with that being said, as always, we start with the interest rates. There's been a lot of different things taking place with the conversations surrounding interest rates. I want to pull something up that me and my private group spotted. I spotted it and I shared it with my group, and we were kind of talking about it. And it makes sense in terms of why this drop took place. Okay, we'll talk about the chart and some of the technicals later, but fundamentally, right, I've been mentioning for weeks, given the fact that we've been able to discover that September and October, they're going to have an interest rate cut. Now there's some speculation kind of, trying to confuse people, basically saying that they're not going to do anything, and then they are going to do anything. There's an 80% chance of it, then there's a 21% chance of it. So it's just a lot of chaos taking place, and they're trying to misdirect you, trying to muddy the waters, I guess you could say. Okay. But when I was looking through some of my fundamental resources, and just kind of looking at different things about the interest rates and what's potentially ahead in regards to that, I discovered, let me go pull it up. Discovered some information that I want to make sure I share with you. I think I shared it with my free group too, just mentioned it. But we had a bit of a deeper discussion live with my private group, and I'll kind of share some of that here. And kind of show you the importance of understanding the interest rates. Okay, so okay. So many of you guys know the resource bar chart. Okay, and their social media is actually pretty helpful. It's not obviously a be-all end-all. The news doesn't generally dictate in the moment where price is going to go, but it does give you a fundamental reference based on certain data points, like 20 out of 20 times. There's been 100% hit rate that the indices, when there's a rate cut at an all-time high, 100% of the time from the last 20 times they've tracked it, prices ended up higher as the year progressed beyond that. Okay, after a decline, it's almost always declined when it's in anticipation for this as well. That's another piece of information I was discovering when I was looking more into this. So that's something that can help you with anticipation, okay, for the future, right? So if you're thinking about implementing fundamentals, which you should, fundamentals, technicals together, these are the types of experience-based pieces of information you're going to want to keep tabs on. Okay, because next time there's going to be an all-time high, and there's going to be rate cuts, there's going to be rate increases. So it's always going to be something that's relevant. Okay, and the more data you can have that can back up, say, a bullish narrative, the better, or bearish, right? The better chances you'll have in order to, to be able to trust what it is that you're trying to assume price is going to do. Okay, so this is very important. I can't remember if I posted it in my free group, but you're getting it now. So yeah, we're going to use that information to kind of assist us in further anticipating that the indices are going to go higher. If that's going to happen, obviously we want to see the bonds go higher, because the bonds dictate where the indices are going to go, where the foreign currencies are going to go, like GU and EU. And again, having that information that I just shared with you, it's very powerful. 20 out of 20 times. Mind you, none of us were tracking this. I wasn't tracking it, right? I don't really look too deep into it unless there's something necessary to look into. And I follow resources like this. One thing I do want to mention too, I'm mentioning to my private group, ChatGPT, this AI stuff, it's pretty fascinating how you can do fundamental analysis and at least get a rough view like fairly quickly. Like I did analysis on some of my stocks and my long-term stock portfolio that generally like takes me a week, given what I do, to analyze companies and different stuff. I don't do everything all at once, obviously, so that's probably why it takes longer. But I was pleasantly surprised that my strategy of analyzing companies and just overall fundamental analysis was able to be done by me just asking questions as a template for ChatGPT to answer. And it basically scoured the internet finding answers for the questions I have about specific assets. So it did my whole fundamental analysis and valuation and company viability and all those different elements that make a stock great when you do the analysis on it. It did all that analysis in literally 10 minutes, right? For 20 different companies. Okay, so I haven't really been big on using AI too much in trading, but when it comes to fundamental analysis, I encourage you guys to start messing with it. If you haven't, because some people don't like it, some people are skeptical about it and fearful and they don't want to deal with it. But I have to vouch for the fact that it did analysis that takes me like 2 weeks in literally 10 minutes. It gave me all the different points that I like to see in a stock when I'm analyzing its valuation and viability to keep it in my long-term portfolio for retirement. I mean, it did it so quickly, and that's just an example, I guess. Maybe for those of you that have been skeptical in terms of how you're going to use AI. Versus just asking it a bunch of dumb questions and playing with it like it's a game or something. This thing could be a real asset, so I encourage you guys to start digging into it. Like things like this, right? You can ask questions like this. What has happened when price was at all-time highs in the indices the last 20 times when a rate cut or a rate increase took place? What was the result from like the last years, last couple of announcements? And I guarantee you this would have been able to be pulled from that. And you could even make a chart for you. It can make a journal for you, a PDF journal that's like interactive. I've messed with it in all these ways. And recently I've been coming out and just like letting everybody know, like, this is a beautiful resource if you want to get, different things like what I've just mentioned. Okay, so definitely lean into it. Start using it for that purpose. And it's going to be very helpful. Okay. But yeah, so getting back to what we were just talking about, right? So this is going to be important as we do analysis on the bonds and yields because they're the interest rates, right? And so if price is going to continue going higher in the indices and foreign currencies as a result of a rate cut, we're going to want to see the bonds go higher. Okay. And it looks like it could be setting the stage for that. All right, we got buy side up here. We got a monthly high up here. We've got a failure swing down below, and you know what else we have? We have a beautiful S&T that's been present. Okay, so now you start to see how you can get some fundamental analysis or fundamental like data points, and then you could start to merge it with ICT concepts. Make it a little bit more detailed in terms of how you're analyzing something and what price should do based on that type of tactic. Okay, so again, like I just said, we have SMT here. Okay, we've got the low here, lower low, low here, higher low. Okay, and then like I said, the fundamentals, right? There's data supporting the fact the price will end up going higher. So if we take that information and then we come to the chart and look here and see what we've been observing the last couple of months, right? Price has been consolidated. It has displaced back in January, right? After it took out a low. In this case, this one left the low here. But it made a lower low here on the 30-year. And we could see that there's evidence that it may want to continue to go higher. So if we start to see displacement going higher, we now have fundamentals and technicals aligned with this asset. And then, of course, going back to the stock market, right? Like I said, we have some data from the last 20 announcements when we were at an all-time high, when there's a rate cut, what transpires after that. Okay, so we have all that information behind us now fairly quickly that helps us determine that there's probably a more likely scenario that price is going to continue going higher for the bonds, lower for the yields potentially. Like if the bonds go higher, the yields should go lower as a result because they're reverse. But then also that information plus the fundamentals helps us identify the fact that this is absolutely within that overall perspective, right? What have we done? We left the high and we just simply retraced into a bullish order block on this weekly chart. And it hit the midpoint, which is something we were watching throughout the week. We'll get a little deeper into it later as I drop down, but I'm trying to show you the correlation that can be derived from using certain tactics and then taking them to the chart to make sense of what is showing in terms of smart money, right? ICT concepts. And how all of it can dovetail together to create this process of validation, of being able to trust your overall narrative, even in the face of price going against what we've maybe been calling for a couple weeks, couple months, right? Which has been bullishness. The news is important, right? World events are important. What's taking place in the world is extremely important. Because it directly impacts commerce, it directly impacts economies, and understanding how to use these tools in a very simplistic way, right? Hopefully things that I've just mentioned have not been overly complex. You don't have to scour the internet now because of AI. You could just type in certain questions to it and it'll do it for you. That's basically what AI is doing. It's taking the whole entire internet, you ask it a question, and then it goes and finds the answer in seconds on the internet, the same way you would try to go do it, but it's just extremely efficient. And you can use that resource to be able to derive an opinion like what we see here. Right? Make sense of this decline. A lot of people that don't see things like this, that are lazy, or just don't understand simply because they don't have experience, this probably makes them feel like it just fell off the face of the earth. Okay? They probably thought bearishness overall. It's not bearish. Okay? And if it was to close below this, that would have set the stage for us to target the lows down here. But it did not really do that. It came down, wicked, and now we're well above the midpoint. So I'd say that if we lose this low, that's the only time I will consider long-term bearishness. But then again, long-term bearishness or an adjustment from this run higher is going to have to wait for the rate cuts simply because of how impactful they are. But I'm assuming that given the fundamentals we just talked about, right, with the rate cut news, the impact that's happened as a result of that from history, it just makes this all make sense that this is going to continue going higher. And then if we come over here and look at the DXY, here's the monthly chart. Okay, monthly chart basically came back to a breaker. I called the up move here and the down move. Go back and watch some of the videos to confirm that. I've also been calling this to continue to go lower, and we were watching this weekly bullish order block here to see if we could close above it in terms of the midpoint. And that has not happened. And you can now see the wick here. Yes, it displaced up here and closed and tackled the high, but there was a bearish order block here on the two week chart. Okay, So all it did was reach to the midpoint of that, close below it, and then quickly got off of it. That is perfectly in alignment with what this monthly chart's doing. So it's continuing to push price lower, okay? And then the weekly is continuing to push price lower. How do we know that? Look at the wick. Okay, you see that large wick? Middle portion of this wick respected. We have an order block, okay? Middle point of this wick has been respected. That's signatures for bearish order flow, okay? And then, of course, like I mentioned about the fundamental interest rate analysis, if the bonds are going to go higher and the yields are going to go lower, that supports this overall continuing to drop, which supports higher currencies, foreign currencies like EU and GU, and higher indices, even in the face of price, aggressively trying to, do something like this. You got to be married to the higher time frame because that will keep you rooted in what's actually happening. And so hopefully the stuff that I've mentioned so far has made sense. If you guys have gotten value today so far, or if you get value from the content in general, definitely don't forget to like the video if you support the channel. Subscribe to the channel if you haven't already. It does wonders for the community so I can reach people just like you that value this type of content, that aren't signal junkie, drug addict traders, okay, that actually want to learn to do this full time, who actually want to understand the markets because, they're passionate like I am and like you guys are, right? So it's greatly appreciated, and thank you ahead of time. If you can go do that for me, that would be amazing. But yeah, so do you guys have any questions about some of the stuff that I've pointed your attention to so far? Hopefully it's made sense. And then we'll get a little bit deeper into the call in a little bit with some of the other things I want to talk about. But let me know in the chat if everything makes sense. If you guys have any questions, we can address that now. And how was your guys' week last week too? If you can mention that. If you guys had any issues, anything you want to try to go over, I'd be more than happy to dive into that. So yeah, just let me know in the chat. Give it a second. It's a pretty dramatic lag. I just saw it's like 15 to 20 seconds. So see, did I miss any comments? Andre, I think that's your name. Is this your first time here? I think I've seen you before, Andre. I could be wrong. Looks familiar though. But I'm assuming the interesting comment was from the interest rates. Oh, that was you, huh? That's so funny. Okay. But yeah, we talked about a lot of important stuff already in the last 20 minutes. Got to some meat and potatoes fairly quickly. But yeah, so let's just kind of come back over here to the interest rates again. So again, if the interest rate cut is going to do what it's done the last 20 times with 100% reliability, which, basically a rate cut at all-time highs for the indices have basically sent price higher for the next 12 months, or it's ended higher over the 12-month span after that. We should be able to continue to see this run higher. Okay, we do have a quarterly bearish order block here. Okay, we go to the 3-month chart. Okay, we got this order block in here. It's kind of encapsulated by this larger one, but we're still sideways as well. So these interest rate cuts are going to really send price to levels that they're supposed to be at. We should have got a rate cut a long time ago because, we've just been pulling in a lot of money. Things have been going well economically for the U.S. I think there was an estimate that we're going to pay off like $4 trillion from the debt. So instead of like 37 trillion, it's going to end up being 33 trillion as a result of what the president is doing with tariffs and everything else. So of course you don't hear that on the news, right? But yeah, some positive economic things which are going to be good, really good for the stock market. And inflation should be able to get cut a little bit more. Hopefully they stop printing so much money for the sake of the world, because many people use our currency and rely on our markets. So yeah, we'll see what happens in that regard. But yeah, so looking here, right, again, we're hanging around these lows, but there's that SMT at the lows that we're definitely going to keep tabs on. Okay, and it seems like if this is going to go higher as a result of what I just mentioned. So I want you to save this, right, in terms of what we've been talking about the interest rates. And I want you to pay attention to some of the levels that we're going to point out here. And then just keep a rolling log. Every time you hop on a call with me, keep a rolling log. What did we talk about last week and what actually transpired? You know, and keep it as a study, because generally we're correct, you know. And if we're not, obviously we figure out why. But yeah, we hopefully all the stuff I mentioned makes sense. Repeating that because I want to make sure that it makes sense. It's very important stuff. But yeah, so looking at this monthly chart or quarterly chart, the quarter has been an indecision type of delivery. It's not unreasonable that this is what's transpired, because the summer months is basically when this quarter started, okay, back in June. So from June up until this point, we've had an inside quarter, right? What does that mean? There's inside quarters, inside days, inside years, inside months. And that basically just means that, you know, price is trading within the previous candle's range relative to the time frame you're doing that analysis on. So, you know, inside delivery like this is generally a slow mover, right? It's more anticipatable that this is going to be the characteristic when we're going into something seasonally, like the summer months, right? If you're looking at the quarterly perspective. So we're going to have to break out. And I bet you the rate cuts will be something that pushes us in that direction in terms of breaking out. But I think, you know, we look at the 5-year and 10-year. I think that the 30-year is the lagger. So we'll see if the rate cuts do what they're anticipating and what they've done 100% of the time for the last 20 rate cuts. You know, we should end up continuing to go higher. What could we paint for the narrative to get up there, right? If we take this high extreme to the low extreme, we got equilibrium here. So we got quarterly equilibrium for the quarterly range. All right, it's just been sideways. So it's ironic that we're right here next to the equilibrium point going into this next month, which has the rate cut attached to it. Okay, so if you guys remember, when we're in consolidation, something you have to pay attention to is the fact that that consolidation, when it's ready to leave that consolidation, equilibrium from the high extreme to the low extreme within that consolidation will generally be when price chooses to deliver away, right? It's going to use that area of equilibrium at some point to get price out of the range. Okay, it's not only like a magnet that keeps price going back and forth, but when it's time to go and there's a higher time frame reason and there's a news event that can give you adequate institutional sponsorship or a excuse to push price away, generally it's going to be used, it's going to use the equilibrium to launch price away. Keep that in mind too as we're sitting here, so then you can kind of observe that, and if it takes off, it'll be an aha moment, you know. But hopefully it's an aha moment already, because you know, I've seen this so much and I've called this type of scenario multiple times this year as well. But yeah, that's an amazing study. Equilibrium, higher time frame to lower time frame, and how the higher time frame equilibrium is used. So yeah, whether you're in consolidation or even in a trending environment. So if price is going to go higher, if we are going to see price go higher, which is what my anticipation is until proven otherwise, you know, with the rate cuts, right? We'll see what the result is. We're going to eventually end up targeting this. This is a previous quarterly high. All right, so remember, this is a 3-month chart. So we're getting, you know, we're getting a feel for, you know, what the overall condition is going into this new month, which is going to be a new quarter, right? We're ending the month, so we got to be prepared. We'll do another monthly analysis going into next week or the week after this coming week. We'll kind of go over the monthly process, do some more fundamentals like COT and open interest analysis, all kinds of different things, as we always do for the start of each month and new quarter. But if it is going to go higher, this will be our long-term target, our more quarterly perspective target. And then, of course, we can potentially get to the extremes depending on how excited this rate cut is going to make the bonds and foreign currencies and the indices, how excited it's going to be. So yeah, our upside targets are obviously up there, but if we were to break down obviously and get below this low and start really pushing away from this monthly fair value gap, leaving these highs, we may not be ready for a decent amount of time. So we'd have to wait for displacement and other factors, maybe in October, if this first rate cut doesn't really do anything to get us up to the highs up here, But yeah, this is our buy side, right? Like I always generally start the Sundays off with, you automatically got to look at the news, and then you got to look at the current and the previous candles high and low, and that's your range of opportunity for the coming quarter, for the coming month, for the coming day, coming week. Okay, it's generally the first liquidity it's going to want to try to target. I don't personally think that this asset is going to get below equilibrium. We'll see. But my expectation in anticipation for this rate cut is going to be, this continuing to go higher. We can kind of already see some evidence of that potentially unfolding based on what the DXY is doing. There's nothing in here telling us that we're bullish yet for the DXY. There's nothing in here, especially off of this reaction, off this order block, that's telling us the price wants to go lower and stop going higher. Now if we would have got down below this level here or closed below, simply closing below this order block here with the previous week that just passed would have set the stage for us to then target these equal lows and then eventually this fair value gap. All right, because and I mentioned something last week about the order flow, how price delivers, right? We took out external range liquidity, it set a fractal high, and then what did it do as a result? It ended up reaching for internal range liquidity, right? Or a discount from this low to that high. Okay, so we should be able to be done with that. As I've mentioned before, order blocks are balanced price ranges. Okay, pretty much every PD array, for the most part, is leading you to a balanced price range idea. So, we'll see what happens with this, right? But it should not, given the fact that we've already traded all the way down into here and now given this reaction ahead of the rate announcement, I don't believe that, this is going to be disrespected as a balanced price range. So I think this is going to hold. So we got fundamentals and now technicals obviously supporting that this will hold. Okay. And again, if we close below the midpoint here, then that would set the stage for us to then target the sell side. But like I said, the first thing you do, right, just, for those that may be new, you got to look for the current and the previous high and low, and then maybe even 2 or 3 weeks ago, if it's close enough, right? In this case, these lows are insignificant at the moment, unless price was to close below this midpoint. Let me actually get the midpoint of the body. This is the overall, from the high to the low, the whole range. But in terms of validation for an order block, it's going to have to be like the midpoint of the body, because the wicks are manipulation for the most part. Like ICT says, wicks do the damage, bodies tell the story. Okay, so in order for an order block to be disrespected, it's going to have to be the midpoint of the body that gets broken. But the whole order block, the whole breaker that forms the overlapping of fair value gaps, those are just some examples of balanced price ranges. And they form on all time frames, right? So as you're monitoring price, as order blocks are being created, as fair value gaps are being created, then traded back through and used as inversions, the reason it's an inversion for the fair value gap and it holds using that idea is because it's a balanced price range. So it doesn't have to trade through it. It's not just because it's an inverted fair value gap that it's an inverted fair value gap. The delivery is what's important. Why is a fair value gap or order block or anything else important? And why should it hold? Because it's offering both sides, and it's just kind of the way it is. It wants to be efficient, basically offer both sides of the market at some point, and there has to be a buyer and a seller at every given moment. It could just be one trader on both sides. That can lead to a huge displacement because volume doesn't matter. It has no bearing, because if it did, the markets would operate in a very, very different way. But we've seen evidence that it's pretty much valid in terms of the balanced price ranges and these different ideas and the characteristics behind how they deliver within those concepts. Okay, so again, this will be my invalidation level that'll turn me off of trying to continue to push price higher. Otherwise, we're going to continue to go higher. I haven't been overall bearish. My opinion has not been overall bearish. We did kind of look through some of this because last week we talked about this, trying to see how this was going to hold. Not this past week, but the week before that. When we were at these all-time highs, I talked about when a fractal high forms, the next 1 to 2 days after this third candle forms can generally be anticipated to retrace and go against it to reach for a PD array or some internal range liquidity. Obviously, that took place, and some, because in my opinion, they're trying to pull in the interest for shorts. And given the fact that the interest rate market's being cut has led to all-time highs creating new all-time highs, right? A rate cut as we're at an all-time high, right? The anticipation of that at an all-time high has led to 100% strike rate of price going higher. Because that's the case, if you're smart money and you're thinking from the lens of the big players that move things, you'd want to do whatever you can to pull people into shorts, right? Come down, stop people out, then ram it against them, which we walked this whole move lower to higher as well. And now they've kind of done it again. Okay, so now if we look at price, we can now see that we have a fair value gap in here. Okay, we got the failure swing here to break this low. If we scrub over a little bit, we have a lower low here, higher low here with the S&P. All right, if we look at some of these lows, see if there's more. And now we have this low, higher low. Low, lower low. Okay, so there's SMT here and SMT here, right? So in a shorter term basis within this delivery, but then we also have it on a larger scale, right, with this low and that low. And then as a result, we've also seen this huge displacement, basically violating the last 1, 2, almost 3 days of delivery as a result of this delivery going higher. Not only that, right, we've basically continued to hold on to the assumption that the DXY was going to continue to drop. I still held on to that in the face of this. I didn't assume that things changed because of what we just talked about when we were on the DXY, how all these different things are holding, right? The higher time frame monthlies holding bearish from the breaker. This is also an order block. Okay, the large up movement to the down delivery. We also just talked about the wicks here, how that's showing us that institutional sponsorship is still bearish. We talked about the rate cuts, how that's supportive of foreign currencies continuing to go higher, right? Which the GBP USD looks like it's pretty much using the similar aspect of retracement to an order block on the higher time frame to then try to push price higher. Okay, if we go to the weekly, right? Very similar characteristics between the foreign currencies, which are between the foreign currencies and the indices, which are heavily impacted by what the interest rates will do, the bond market. And there's, a lot of assumption that it's going to, have a rate cut and it's going to go higher. So you can start to see everything come to life together, plus intermarket relationships, right? We see that the DXY has now had that huge decline. Okay, it basically looks like that's a displacement that may kick us back in line with this trend line liquidity being attacked. Let me actually move this to where it belongs. Okay, so does everything make sense so far? I kind of just tried to repeat some of the stuff because they're so important. A lot of people don't realize like, oh, this is important, that's important. So, I talk about other things, and then they'll just skip over some of the really basic, important factors that have led to the accuracy you guys have been able to witness all year. So let me know in the chat if everything makes sense. Tyler, you said everything makes sense. What about everybody else? Just let me know. Let me also know if you guys can hear me okay, because I've been getting a lot of stupid messages here. And hopefully the quality's okay. I don't know what's been happening. That's why I was late today. But yeah, if you could just let me know if you have any questions, and maybe confirm if everything's cool in terms of the stream. Probably should have asked earlier. I just assumed. You can see the 8-hour wick too. Not only the 8-hour wick, but you can also see the higher time frame wick. And then you can move up here and you can also see another wick being respected. So you can see from lower to higher time frame, everything aligns. It's like everything is just like coming into focus. From the lower time frame delivery, which sets up the other weekly time frame delivery, and then the monthly time frame delivery. All right? So it's beautiful, right? Mike said it's all good. Tony, I'm assuming that 100 emoji was everything makes sense. Tony, you can hear me okay too? Okay. All right, cool. Yeah, I don't know what the hell, why we always get these notifications that are dumb. Like nothing's even going on and it's just telling you something's going on. Doesn't make any sense. But yeah, so we're going to stick to basically the opinions that we've just talked about. And I got a couple of other things I want to go over as well. Like we'll dig a little bit deeper into this. But we've kind of knocked out a lot of pretty important elements. But yeah, we'll take ourselves down to here. So yeah, we got this order block in here. Of course, that's within the bigger one on the weekly chart. But you can see the 2-day charts supporting the fact that price will go higher. The weekly is holding within the weekly bullish order block. We have that SMT here. Where's this SMT, right? Is it these lows in here? Right? Is it the lows in here? Or is there something else that it's showing an SMT with? Is there more of a more relevant SMT rather than just these lows that you could see in the chart based on what we've talked about for the last couple months? Well, a couple times throughout the months. What stands out to you guys? I want to see if you guys could see it. Yes. Yeah, Tyler, you remember. You're here all the time. Maybe that's not fair. But yeah, that fair value gap in here, right? We could see that the fair value gap was traded to here for the Dow. But then we look at this asset and the S&P, and they've both failed to get down to the fair value gap, right? So that's a form of SMT. Okay, same with if there's like an order block across the board and the order block gets left by one of the assets that are correlated, but the other ones move away from that PD array. Because these are correlated, they're supposed to do very similar things. When you catch it not doing similar stuff, it becomes pretty clear that smart money is engaging. It's the fingerprints of smart money that they can't hide, just like fair value gaps. The SMT scenario at higher time frame levels at certain times of the week, the month, the day, okay, aligning SMT with those timing elements, news events, and other stuff as well. It becomes supercharged. And then of course SMT, when you're looking at like this asset, you justify SMT. Say there's two SMTs, there's one at the highs and one at the lows during like the New York session. Or even on the higher time frame, you validate which one should be trustworthy based on obviously the higher time frame direction, but then also with what DXY is doing and what the interest rates are doing. So that right there, that statement right there, like the fundamental way or facts on the way that you're supposed to observe SMT and how you can justify them. Hopefully that simplifies it for some of you. I get a lot of questions about SMT. But that specific process I just laid out in like 2 minutes, is pretty much what will help you identify which SMTs are important and which ones that form should kind of be discounted. You could catch an SMT reaction that's worthwhile counter trend wise if you understand how we do counter trend trading, and if you understand what I just talked about in terms of how you validate an SMT using DXY and the interest rate markets relationship to the asset you're trading and spotting the SMT in. Okay, that's a very quick explanation of something that people overcomplicate. So yeah. And then, of course, if an SMT doesn't make sense, right? Like if there's two and you're still confused, maybe everything's consolidated and there's 500 SMTs you're seeing, then, you should just elect to wait. Wait for it to displace and then it'll confirm. And if it confirms, you can get in with a continuation variation of any of the models that we talk about or any of the models that you use as an ICT trader. Other ways of trading, you probably can't think that way. But, that's why this community and family of ICT is unrivaled. We're all part of the ICT army. If you're an ICT purist, which I encourage you to be if you're not already, because there's more funded traders using smart money concepts, more full-time traders, at least publicly using ICT concepts. So with that being said, even if you don't like ICT, why in the hell would you just discount it because, maybe you don't like his antics? It's not worth putting to the side. Yeah, patience is definitely needed too. Sometimes you gotta wait. And this last month, basically, since June, has definitely tested your patience. It's definitely been a good gauge as far as where you're at as a trader. And it's a good experience to know when things kind of adjust from extremely clean and volatile to volatile but less clean and less reliable. So it's a great experience. Even if you blew accounts, hopefully you didn't. If you're following rules that we talk about, there's no way you would have blown an account. But if you broke the rules and you just discount everything that every trader tells you because of an ego or something, you're going to be taught these lessons in a very painful way. We started the summer months saying that the risk is going to be cut, and you've seen how prices delivered. Yes, there's been opportunities. We've pointed them out. Yes, there's been days that have been good mixed with days that have been bad. But if you follow the rules, if you're listening to what I was mentioning about the start of the summer months and how we got to cut our risk, how we're going into this generally a more shady condition, you should have managed your risk properly, and maybe at the worst been in slight drawdown, not intense drawdown that you feel is going to be impossible to make back. So and now we're kind of breaking out of the summer months, going into the fourth quarter. So our expectation generally is that the fourth quarter is very dynamic, very bullish. Especially because this year's been a bullish year so far, minus the start of the year, which, in my opinion, as I was stating for weeks in advance, the drop was just a manipulation move for the yearly Power 3, which is bullish. Like if you look at the yearly candle, think of Power 3. That whole drop at the start of the year was simply manipulation to get below the open price, come back down, take out the previous year's low. I think there's, a couple of the previous years that it swiped out. But it basically wiped them out and then just aggressively slingshotted. Because Trump is very economically sound, which is why we're going to pay off $4 trillion of debt because of the things he's been doing, based on what analysts on both sides of the perspective, that's what they came to the conclusion of. And that's why, it's been so aggressive. It's been so amazing for the companies. Tariffs protect American business. And, interest rate cuts apparently are going to send price higher. So, good morning, Fritz. And yeah, fractal nature. Yeah, everything worked. It's all the same. Everything I talk about and share with you on the higher time frame, it works on the lower time frames too, So, but yeah, hopefully, like I just mentioned, hopefully you guys have been able to experience the last 3 months and figure out like, okay, well, what he was talking about, what ICT talks about in terms of seasonality, there's something there to pay attention to. You can't allow your day trading perspective to block your ability to gain powerful information that can help you be even more effective, or become effective if you've been struggling, using that higher time frame to lower time frame, and the relevant tools like seasonality, COT, and some of the other, intermarket relationships and interest rate analysis that can really supercharge that lower time frame view. But people are lazy, so they're not going to want to do it. They want to have a signal given to them. Oh, it's Sunday. The market's not even open. What are we going to take a trade on? Right? That's some people's perspective. And, it's unfortunate. And then they'll sit back and see us crush it for, 6 to 9 months straight, aside from the 3 years that I've done with my private group, and then think like, oh man, like I should have stayed. Or they'll learn ICT concepts, assume that it's complex. There's a lot of, moving parts that get pieced together later on. But because it's going to take some time, they end up not wanting to do anything, or if even on my channel or other channels that do things very detailed, people will hop on, they'll see that they're not getting a signal, and then they'll leave. And then they'll see us crush it the next week and be like, oh, well, how did you do this? And how did you do that? I'm like, dude, you should have stayed on the call. You should have came on and asked questions, because I have an answer to almost every question. I don't know everything, but I know what works for me and how I've been able to help my students become, reasonably profitable. And I could say that because they are coming out here showing that they're making money. Like my student Harley, like Tony here in the chat, and a few others that are loading up, which I'll save mentioning for later time. But yeah. There's a method to the madness, and if you don't have all your tools in alignment, the system's not going to work. If the system doesn't work, the machine will fail in terms of trying to generate profits, like long term. Anybody can go on the seconds chart and take a trade. Anybody can push the buy and sell button. Anyone can, have a string of winning trades and be profitable for a short amount of time. Long-term profitability, though, it requires you to be excellent. It requires you to be an expert at what you're doing and how you make decisions and, what your process is. And experts aren't in here just trying to take a short trading signal so they can, make a little bit of money quick because they hate their job or something. That's not excellence. Yeah, Tony said he's crushing the fourth quarter. Damn right, Tony. You came a long way since the first call you've hopped on, and I'm very impressed at the things you've been sharing with me. For those that don't know, Tony hopped on and started with us literally like the second or third live stream I started doing in January. Was it January? Maybe it was February. I don't know. Somewhere at the beginning of the year. And the things he's been able to accomplish this year, although minuscule in the grand scheme of things, because he's going to be here for the next 10 years or more as a trader, but it's still massive. It's still massive. It's still amazing. Even if you're passing one funded account after you wouldn't have been able to pass a funded account maybe a couple months ago, that's amazing. It's something to be very excited about. And if things are simply making sense, even if you're not there yet with profitability, but you've been using what I've been talking about, this goes for all of you guys, but if you've been using what I've been talking about and gaining clarity, this year I've had such an overwhelming amount of positive feedback. And, it's kind of just the same feedback that I get from my private group, the stuff that we talk about, the live calls we do daily, so it's very similar. I expected it, but the attention span on YouTube is very small. So if you're not given something that's like dopamine pumping into your veins every 5 seconds, it's the same thing that ICT had to deal with when he was first making YouTube videos. He'll make a series, and then the first video in the series will have like 1 million views, and maybe half of the people watch it all the way through. But then the next video, there'll be half the following and even less watch through the whole video. And then it just gets slower and lower and lower because people's attention span is so small, and their expectation is they're going to come in here because of social media, and they're just going to come in here and learn about an order block, and they're going to be successful. And it requires so much more than that if you want to be a full-time trader, if you want that laptop lifestyle, right? That you're going to work more than you work probably at your job, to continuously improve as a trader, and then, you bust your ass, and then you make enough money as a trader to then take a couple months off or do whatever, right? You could structure this in so many different ways, and it's really dependent on you. But the harder you work with the right information, which is what you guys get being here and being ICT traders, the better your result's going to be. The more you follow proper instruction, the more you manage risk effectively, the more reality-based things you submit to, the less stressful it's going to be, and the more confident you'll become. Because just the things that we've talked about, Tony can vouch for this too. Like I said, he's been here from the start of the year when I started really pumping out live streams. The stuff that we do here is literally unmatched. Okay, like I'm not the richest trader. Okay, I do well. Okay, but the things that we do are so consistent. And everything can be scaled, right? Like the amount that I've made this year could have been quadrupled if I just increased the size. But I know what the risk environment is. So I'm not going to allow myself to do that in pursuit of a larger gain. I'm just not. I'm not that type of trader. Some of you guys may have a different perspective. Maybe you are the more aggressive trader, and maybe you can, do something with that. But, if you're going to take my advice, obviously I'm sharing my advice, my issues, my strengths and weaknesses, my journey, the things that I feel can help you guys. But everyone's going to be different, But what is undeniable about this community and what I've been showing, what ICT shows, what many of his other elite students are showing, this stuff is unrivaled. And you don't need every concept. Clearly, you guys see that I don't use every concept. I only use certain things, and I organize it very, very easily. I try to explain things very easily. Like today, I talked about the interest rate markets and what happens when the last 20 times, right, when the indices have been at all-time highs and there's a rate cut that's announced or is engaged, what's the result of that? And generally, it's been going higher, right? So I talked about that. That helped us piece this together, right? So this is a tactic, right? It's a process based on what price is doing, but it all starts from the news, what's happening in the world, how that'll impact what is going to happen in the market. If it's happened before, there's data on it. I'd mentioned ChatGPT, right? You could use ChatGPT to ask certain questions. When we've been at all-time highs and there's been a rate cut, what has happened the last 20 times in the stock market? Where has price ended in the next 6 to 12 months? And those types of detailed questions about certain things, you can use ChatGPT to really enhance this process, right? And again, we do this every single week. It's consistently repetitive, and those of you like Tony, who's I think passed like almost 10 funded accounts this year, just by being here on the YouTube channel with me, taking my advice and just being amazing. He's been able to accomplish this stuff, and it's awesome. It's truly awesome and humbling. And I want to see a lot of you guys start to get there as well. I'm trying to pull y'all up. But again, I can't do the work for you. I can't put my convictions, my trust behind the things that I do inside your head. All I can do is show you, talk about it. And, just hope and pray that God touches your heart to keep it in your mind, and then make you effectively apply the things that we talk about. Tony said, I took some videos. A lot of streamers are lost and gamble. Really have no idea, no basis of what's going on. Yeah. And mind you, we'll sit here. Tony, you're notorious for this. You literally told me that you've had my videos up with another streamer up, and you compare them and you see that these people are freaking lost when we know exactly what we're looking for. We may not have an opportunity while these people are out gambling, but we eventually figure out what time, or if we figure out the timing element that gets us in line with the proper opportunity. Sometimes we lose right here and there. This month, has been the smallest month of the year, which I'm not really too concerned about, right? I took 5 losses this month, very tiny, and just barely squeaked out about $1,500 profit. It's not bad. It's every single idea has been shared live. Okay, so everything that I've engaged, things that went wrong, we kind of worked through them and stuff like that. But sometimes it's going to be that way, and because the 1,500 is so small versus the other months, because of the fact that we've cut our risk aggressively, and we have decent sized accounts. I have a personal account that's beautiful in terms of size. I'm not going to disclose my financial situations, and then of course I have the funded accounts, and currently this month I've been focused more on the Apex account that I'm now trying to build up. Probably going to try to buy like 3 or 4 more, so then passing one will give me more. And yeah, again, just to reiterate about Top Step, you definitely, if you want long-term success, you definitely don't want to deal with Top Step. I've learned that recently, that it's just not worth it. If you're a trader that wants to do withdrawals regularly and you don't want to have to make $20,000 profit to make a reasonable withdrawal, and why do I say that? Well, because if you make like $1,500 on Top Step or more, or less, and you're just trying to withdraw like a little bit of it, first of all, you can only withdraw half of it, right? But if you're in their funded account, that's not the live account, right? Because they have a live account and a thing called an XFA account. And if you're not, if you're in the XFA account, which is prior to you going to their live account, which the rules are still the same pretty much when you go to a live account. But if you have that XFA account, you make $1,500. First of all, you can only withdraw half of it. Okay, and that's cool. There's nothing wrong with that. I don't have a problem with that rule. But something that they don't make explicitly clear to people, and most YouTubers, not one person have I heard talk about this, that's trying to have an affiliate link to Top Step, because they're not trying to tell you this. Because if everyone knows this, they're not going to use Top Step. Especially if you're trying to withdraw and not feel like you have to make $10,000, $20,000, $30,000 to make a reasonable withdrawal. When you make that first withdrawal in an XFA account, they don't announce in bright, bold letters that if you have like $1,500, right, and you have a 100K account, you have like a $3,000 buffer, okay? But they don't announce that if you make that withdrawal and you have like $1,500 because you're maybe excited to take a withdrawal, if you take $700 or $600, which is half of like $1,500, away from that profit because you want to, withdraw, that $3,000 buffer that you get is now completely gone. You now only have what's left after you did that withdrawal. So if you have $1,500 and you take $600 to cut it in half, you now only have like $700 to work with in terms of risk. That $3,000 drawdown limit that you get normally through the challenge and up through that evaluation process, yeah, it completely disappears when you make one withdrawal. Your first withdrawal, it's completely wiped out. And most people don't know that. Nobody talks about this. Nobody. I haven't heard one YouTuber talk about this. I haven't heard anybody that has an affiliate link say this about them. And if you're someone like me that wants to take a quick withdrawal, I don't need to make 20 grand to be able to want to withdraw. I'm cool with just not worrying about it. And just doing what ICT said, right? When you get a funded account, when you make the money, withdraw it. Okay? You can't do that with Top Step. They're demanding you build a huge amount of profit, at least above 3,000, right? Or more, actually. Well, beyond, like 6,000. So then you can have that buffer, But they don't make it explicitly clear. They don't send an email. They don't do anything. They don't give you a warning. They don't do anything like that. So with that being said, I'm probably going to make, one withdrawal off of them, and then probably look to put all of my attention away from Top Step. Because I already have a personal account. Okay, like, and that's the main account that I like to use. But I like the funded accounts here and there for little extra income, quick withdrawals, so I don't have to really take or do much in my my personal account if the conditions are a bit and I don't want to really mess with my personal account, which is where the majority of my trading goes anyway. But that's how I look at funded accounts, just like an extra income, And I feel like the top step, I mean, if you go on ChatGPT, type in, hey, what is the most trader friendly, long-term success friendly funded account based on the rules between like my funded futures, Apex, and Top Step. Top Step is so untrader friendly when it comes to traders trying to make withdrawals and not have to feel like they have to blow up that account, because who the fuck wants to blow up a funded account that's fake money, that you don't have full access to the cash to withdraw at any time, and if you do withdraw at all, it'll close the account. Who the hell wants to do that and grow an account like that? I want to make money and pull it out. What the fuck? Like, why am I penalized for doing that? Right? So that's Top Step. So even ChatGPT tells you, Apex and my funded futures are so much more trader friendly that it's not even a comparison. The rules are so restrictive, and it makes it so long-term success-wise when you're trading with Top Step, it's pretty low. Okay, people do it and whatever, they like the dashboard or whatever, but honestly, my opinion, I've had Top Step for a year, and I didn't even realize this because I never even thought about it. Right? I get pretty decent gains, so it didn't even cross my mind. But I'm thinking about you guys. I'm thinking about the people that I teach, and I just think like, man, dude, like it's so unfair, And it's, if you have other options like Apex and my funded futures, which are the two that I recommend, you definitely want to start moving towards that direction. Or maybe there's another one that you guys don't know or that you know about. Those are the only two that I like because, those three, Top Step, Apex, and my funded futures, they're the ones that offer futures contracts. And I don't trade CFDs. I could, but, if I could be in my professional U.S. asset in the futures market, I will, over anything else. Tony said that's what everyone is saying. They stopped. Yeah, I've also heard that actually one of my friends recently did a withdrawal. I was talking about hearing about this, how Top Step doesn't like scalping. And that's another thing. They discourage scalping. They'd rather you be a swing trader. And they've denied withdrawals. You can go on YouTube also. But I have a friend that recently had this happen to him because he's a scalper. He gets in, gets 10, 20 points, and gets out. Gets in. He does it like 5, 6 times a day. But he did that and he passed the account and there was nothing wrong with it, right? But then he went to get his first withdrawal, right? Which again, I didn't have a chance to let him know about this rule, which he now knows, and he's now furious, and he's going to go to Apex with me. But he went for a withdrawal and pretty much they denied it. They said reckless trading. That was the excuse. Gambling. That's what they called it. Gambling. Who are you to tell us whether we're gambling or not? Especially if we're not knocking down like big home runs and one trade passes the funded account and stuff like that. If that stuff's not happening, who are you to say that it's gambling? It's scalping. Okay, micro scalping. There's scalping, micro scalping, then day trading, and all the other things. But that's another thing. I asked ChatGPT that. I'm like, hey, which prop firm between those three is more trader friendly to scalping? And it literally said, with ChatGPT pulling things off the internet, that there's been a history of them denying payouts because of scalping. But Apex and my funded futures, they encourage it. They encourage every style of trading. And they're really good companies. The CEOs are really amazing. I've started to also find out that the Top Step CEOs are pretty disgusting individuals. They have brought a couple of traders that are spectacular, a little bit more on the aggressive side, but they're spectacular for the company, and they've been making a lot of money. They still have a funded account, multiple. Some of them are funded with multiple accounts, the 5 that you can have. And they invited a couple of them on. This one in particular, the dude got into a trade and it was a loss, right? He's a little more aggressive. But he got into the trade with these people watching him, and they just started totally destroying him, like attacking him, saying he's dumb, like you're an idiot. I don't know who would have possibly made this decision and like engaged the way that you did. That looks like inconsistent. It looks like what are you even thinking? Like they started just attacking this guy that's been funded with them for over a year, and he was just sitting there like, what the fuck? I felt for the guy. And then I started really finding out all these other rules that I wasn't aware of, really. And I'm just thinking, like, dude, what's the point in being with TopStep? What, their stupid platform? Oh, it's another thing. You can't even trade with Trade or any other brokers either now. You can't use TradingView to execute. You have to use their stupid platform, which goes down every week. If you're in their Discord, you could see that their support tickets is every week, almost every single day in July. The shit went down. It went down. It went down. It went down. And then August, it's went down like 8 times. And they're forcing you to not have any other options because they're trying to keep you in their sphere of influence and just completely siphon your money away. Making it 10 times more difficult. And, it's just, and then the tools are unreliable. It's new. Maybe it becomes better eventually. But just a simple fact that I can't trade on TradingView with another account that I get. With accounts that you currently have, obviously they don't touch it. But if you have to get another account, or if you blow it for whatever reason, you're going to be forced to be on their shit. And then another thing too that isn't talked about is, because they've been trying to get me to move to a live account, and I'm not going to do it because I'm going to just make a couple more withdrawals and close the account, withdraw all the money, because I hate their rules. They're totally unfriendly. But now I've also realized that they're going to charge you $135 because you're not able to use Trade or any of these other firms that allow you to, or brokers that allow you to be on TradingView, which offers data for like $7 a month. Well, TopStep has now took it upon themselves to now charge the live trader $135 a month. So you stop paying the fee to then get into a funded account, and the fee's waived, just so you can go into a live account where you're now going to have to pay for data because they're trying to get you to pay for the data and be on a live account because they're paying the data fees supposedly. But the $135 is pretty insane because we're not all going to trade every single futures contract. We don't need every asset. Okay, so you only pay for the things that you're going to use, which could be as low as $7 a month with TradingView. But they're forcing you to get the full package. Aside from all the other things that I just mentioned, the rules, this and that. So why am I focusing on this? Because, I've been a big, encourager for TopStep because I like their platform and I've been trading with them for like a year. But for the students that come to me, I'm starting to see that that TopStep has changed. They weren't always like this. The rules weren't always this way. But now they're changing the rules and now trying to pull you into their platform so then they can now add another $135 fee onto you. That won't ever go away. You don't have to deal with this type of stuff. They maximize the amount of fees that you're going to have to pay now for the data. That's unnecessary. I don't trade these other futures contracts. I don't look at most of the markets anyway. I look at certain markets and that's it. Why am I going to pay for like 1,000 other things that I don't want to deal with, that I'm not going to engage with? It's just another way for them to siphon more money and have a fee after they've waived the fee because, they're money hungry. They're from Wall Street. They're floor traders. So, the industry is filled with disgusting individuals and, they're starting to show their nasty face. And so I'm encouraging you guys to look towards other avenues. Look for My Funded Futures. Look if you can, right? Apex. Apex, I encourage you to go to Apex because if you like the lower fee with TopStep, you can simply just, get the codes that are given out from many, many different people. They got their affiliate codes that give you 80% off. So instead of it being $300 a month, it'll be $60 a month for a 100K account. You don't even got to do that. You could buy a couple of for the same price of one Top Step account or one 100K account with Apex or My Funded Futures. You could literally get the discount codes, and you can buy like 3 or 4 different accounts through Apex, right? And you could stack them all together for the price of one normal funded account from like Top Step. And 50K, right? So you keep your risk low, but that's okay though, because if you have multiple accounts, you're not going to risk a lot anyway, because you're just going to multiply. If you make 100 off of 20 accounts, right? That's what, $2,000 or more, right? Is my math correct? I don't fucking know, right? It'll be a lot for doing just a little bit, and that's the benefit with Apex. That's why I'm going to them. They're cheaper, obviously, than My Funded Futures too. So price is what you're focused on. My Funded Futures, they're reasonable, but you can get more bang for your buck at Apex. And there's, it's a pretty large testament to the solvency of the company, the professionalism of the company. If traders in the ICT community have withdrawn in 2 payouts $4 million between Trader Kane and Jade Cap, they've withdrawn that much. It's pretty insane. So they're obviously solvent, otherwise they wouldn't be able to pay you out, and there's no issues, so. But yeah, Tony, that right there, that was the icing on the cake. The icing on the cake, aside from the other things that we've been talking about today. It's not worth it at all. They got a great dashboard, don't get me wrong, and they've changed it. They've kind of stole TradeZella things, like some of the elements to their trading journal, and kind of put it into their dashboard. Like the month chart that has like the green and red showing you on the days and how much you made and so on and so forth. So they've invested in technology, but now they're trying to get that money back, I feel like, by doing the fee thing. Let's charge them $135 every month for shit that they don't use, when they can go on TradingView and get it for $7.99 a month. It's just, you could just kind of see they spent a lot of money on this dashboard. They did a lot of investing into their tools, and now ironically they've weaseled in a way to start charging you money, forever. It never goes away. So just thought I'd mention this stuff, you know what I mean? It's very important. And again, it's not for me, because I already know what I'm doing. It's all structured for myself. I got my personal account. I got, funded accounts and stuff like that. Mainly leaning into my personal account, because that's the goal in general. But with funded accounts, it's a good small investment that you could then use to build up more income off of a small investment and have more access to more capital to trade with. So yeah, hopefully that's been helpful. And if you guys are in Top Step, definitely move over, to Apex or My Funded Futures. But yeah, so do you guys have any questions about the technicals, about what we've talked about today in terms of where price should go? I've pretty much covered my overall view of what I think price is going to do. But if there's anything specific that you guys want me to mention or go over, or, if you want to talk about anything specific, I'm more than happy to go over something with you guys, so we can make the rest of the call more personalized, kind of what I do with my private group when we go live. And those of you that are in my private group, if you have hopped on or are on right now, just let me know. Right, I've been mentioning about one-on-ones in the schedule, so just let me know. You can't be helped if you don't open your mouth and ask questions. So that's very important. That's that's mentorship. That's apprenticeship. That's the actual stuff, not just videos. Real time, getting things answered correctly, having that support system where you can reach out to someone and get an answer, so you're not, just spending months on a topic that's probably not even that important. So that's mentorship. That's priceless. You know, that's what some of these people are charging $15,000 a session for, you know. But, you know, stuff that we know and do is valuable. There's no price tag, but, you know, I obviously have my stuff organized in a way that's reasonable for way more people than them, you know, and I give ridiculous value every week for free, let alone live. Top to bottom approach is great. No one does it. Yeah, I appreciate you saying that, Mike. And this huge run higher in the NASDAQ, Mike was actually one of my private group students, I believe that was on the call with me as I called this higher, reaching for this gap up here and the volume imbalance. And this one too, right? From this candle, there's a fair value gap here. We reached for that too. Just a quick template, right, of what we were seeing. We had this failure swing in here. It's an order block. Price used this fair value gap, run on stops, shift in market structure. That's a YouTube model. This high to that low became a BPR. And we watched price sail to these highs, but then well beyond to the overall target I assumed for TGIF, which I called it in advance. And people like Mike, people like Tony, these people are there watching me do this every single week. So any doubts that anybody has, if you're new, you know, you could keep them, right? I don't want you just to take my advice for anything. I want you to test me. Put it to the test. See if your time spent here is worthwhile. And, you know, because time is a currency, you know, it's not only monetary in terms of value for you know, something to be meaningful. It's also time. You know, if you give me your time, that's probably the most underappreciated asset, the most undervalued asset, because we don't get any more of it. And there's a lot of time wasters here on YouTube. A lot of people that just really don't care. They could care less if you succeed or not. So they just tell you bullshit to pump some dopamine into you, so you pay attention the whole video and come back every video because, oh, there's something new coming. And then they get paid off of that. You know, here, you know, I'm very generous with the time I spend on these calls. You know, with my students in my private group, whenever they ask me, I'm, you know, generous there. I'm generous on Instagram, right? People ask me questions and I respond like every time in great detail. Take like 20 minutes at times and just answer some questions from some students that support me. But it's because I want to see you guys win, you know. And hopefully the channel grows. I'd like to see it grow because that just means that I'll be able to continue to provide value and change, and hopefully help change more lives and start putting a better taste in people's mouth about this industry. Because not everyone's a scumbag, loser, lying sack of shit. Okay, some people truly want to be here and give you value that's helpful. You know, and I hope I embody that good enough, or hopefully it's obvious enough to see that that's the vibe here. You know, I remember Event Horizon, apart from yesterday, so it's surreal to witness it. Yeah, Mike. We those that don't know, I was live with my private group and we were talking about the concept Event Horizon as one of the draws on liquidity as we were going to pull up into this up here. And that was amazing to see play out because we called it ahead of time. We called it before the fact. Most people, you know, they're not using that specific thing because they don't have anyone explaining it to them good enough. It's somewhat of an easy concept. But if you see this new week opening gap in there, and I believe it was this one up here. Yeah, was it that one? Oh, there's another one that's closer. See, I think it was that one. Of course, I tried to clear out my chart for freaking today. I don't like it being too busy with too many reference points. I probably should have left that on there though. But yeah, if you take, when we were dancing around inside this fair value gap, I was mentioning to my private group, we have this new week opening gap and this new week opening gap that are right next to each other. Right? You could say that, yeah, we got this one and this one and this one, but that stuff's not important if it has to pass through this one first. It has to pass through this one first if it's going to go higher. So because that's in close proximity to the narrative that we're looking at in terms of price trying to bounce and go higher after we saw DXY decline, an easy way to have an extra PD array, right, the event horizon PD array, is to find these near-term logical PD arrays in the form of a new week opening gap, two new week opening gaps that are close to each other that can be reasonably used within the narrative trying to go higher, right? Basically needing to pass through them in order to continue that larger time frame delivery, which was to the buy side. So if you take this, or before I point this out, does it make sense what I just said? And when event horizons are going to, first of all, be there, but how to use them, right? Or how to identify the new week opening gaps that are going to be utilized in regards to that concept. Does it make sense how to identify the new week opening gaps or new day opening gaps? Because the same thing applies to new day opening gaps. You basically take the two that are logical, that are reasonably fitting within the narrative, like in this case it's going higher, and you break down the mid portion of that. And if it's going to draw to something like the daily fair value gap, because that was the narrative, right, after it displaced and shifted above here, TGIF, bearish week, so on and so forth. But it fit inside the draw to this daily fair value gap, right? So very reasonable target. Oh, whoops, I forgot to. Yeah, it does. Okay. Yeah, because it's not just any new week opening gaps. It has to make sense within the narrative to draw to those levels. Okay. Yeah, appreciate you reminding me that we talked about that, Mike. Oh, nice. It's new. It's new to you. Awesome. Yeah, it's something that ICT's talked about for a while. He's not going to apparently break down more of the details about it. Just basically what he's given us is enough. But when he comes out with his books, I encourage you guys that are in my private group, maybe even here on YouTube, maybe I'll do the same thing. But I encourage you guys that are here or that are in my private group to purchase those books. Maybe I'll, buy them for you all, just as a thank you for being part of the group and supporting me for as long as you have. And then we can, go through it together, because it's going to be more advanced. It's going to be way more detailed pieces of information. It's going to probably be a very interesting read, to say the least. But maybe I'll do that for you guys. Maybe those of you that are part of the group can get a copy of it. And maybe I'll gift that to you guys for Christmas or something if it comes out before Christmas. And then maybe we could do something on YouTube with it too. If you guys have it here on YouTube, if you go out and purchase it, we can hop on YouTube and maybe talk about it as well. In some capacity, but of course there's no horizon for when that's going to take place, right? When he's going to drop it. I'm excited for it though. Because we'll see what else is missing and really get a feel for what's actually happening, or what's the backdrop behind these things aside from the technicals and how they work. What's under the hood that we're not aware of, that he just refuses to mention about any of the topics. It's going to be very, very interesting. And yeah, he has said that if those of you who purchase it have not went through the YouTube channel and his 2016 stuff to 17 stuff, it's going to be very useless. You know, there has to be a very strong understanding, or at least an awareness to everything or most of the stuff that's within his concepts, to be able to truly make the books he's coming out with valuable to you. Okay, so keep that in mind. Some of you guys maybe didn't even know that. You thought that maybe it was going to be a book that's going to have all the secrets. He's very meticulous, and in a Twitter space, he's mentioned that's how it's going to be. You know, just like how when people got the knockoff versions or the bootleg versions, right, from people that were shilling his mentorship, right, like stealing his videos and selling them back to people, people that were in his mentorship, basically stealing his stuff. That's why the people that got that stuff, that's why he wasn't necessarily worried about it, because people that took the bootleg versions, they would basically download the videos and sell them to people. There's a reason that most of them still failed. You know, they still fail to this day probably, you know, because the mentorship was not there. The mentorship is what I do here. The mentorship is what I do on Tuesdays. And it's the mentorship is stuff that ICT has been doing, right? Going live, you know, giving you evidence and examples real time, you know, without holding back, walking you through things and constantly getting you in front of things so you can see what's really going on from the lens of someone that understands. And then you can go and continue to watch it happen and then become better as a result of borrowing that experience. You know, of course, it requires you to still do the work on your own. But this type of stuff is real mentorship. It's not a course that someone sells you. It's not a book that you buy. It's none of that stuff. This industry is different than most industries. You know, if you're trying to mentor someone, you can't just give them a concept and tell them to go figure it out. It has to be used in the person's hands that knows what's happening. So then that person that's learning can learn to use it in their own hands. And then eventually they can fully use it in their own hands. You know, and it just takes time. But that's why this is so hard. And that's why videos and people that sell courses, you know, if they're not going live, they're not worth buying their course if they have one. You know, I don't have a course. If I had a course, I'd probably be able to sell it ridiculously. But when I finish the course that I'm building for my private group, it's just going to be a perk to those that are in my private group. And if people don't want to join my private group, they're not going to have access to that resource and all the other videos. I have like over 100 gigabytes of videos that I've done for personalized lessons for my private group students, talking about a multitude of different topics. Some stuff that I've mentioned here on YouTube, some stuff that ICT mentions on YouTube, but a lot of different things that I've also discovered personally with my own experiences, like in how I use the concepts. I haven't created a new concept, obviously, but my system, just like your system, is unique. Even if we're using the same stuff, we all use things differently. We all look at different time frames. We all spot entries on different time frames. Some of us like to sell more than we buy, and vice versa. Some trade gold, some trade crypto, some trade currencies. We trade indices. You know, some are swing traders, some are day traders. So that stuff just makes your system unique. Even if you're learning from the same mentor, there's no two traders that do the exact same stuff. We may get very close entries. You know, I may take a buy, you may take a sell though, right? And we both can win if we have a reasonable plan that supports, you know, reasonable targets. You know, but of course there's really only one way to be correct if you're aiming for, you know, price to go higher. And if it just completely tanks and turns around, obviously, you know, there could be a moment when you get it wrong. But, you know, then there'll be someone on the other side having an opinion that it was going to short, and maybe they have their reasons, but maybe they use the same concepts, right? So it's just an example of how this industry or this community itself, the ICT Army, you know, everything's unique. And that's why ICT doesn't have a problem with his elite students that are worth listening to, that prove that they're worth listening to like we do here, and Jade Cap and some of the other notable names. That's why he doesn't have a problem with these kinds of people, and maybe you guys in the future, creating your own universe, and ICT, obviously, he's going to get all the credit he deserves, from someone like me, right? I always give him credit. But he himself has said that there will be a time when you got to detach. There's a time in our journey where he's not going to be solely responsible for the things that you're doing because he's not taking the risk. He's not managing the trade. He's not, not over trading and over leveraging for you. You are. So when you do things and succeed, you're responsible for your success. Like it's like kids that go to college, and then they grow up to be billionaires. I guess there's reason to give credit where credit's due, but it's not going to be solely because of so and so that someone gets successful. It's the work ethic you have. It's how you do things. Your self-image within yourself, how you manage yourself psychologically. That's something that everyone has to deal with personally. And that's why when you succeed, even if you guys learn from me and then succeed, right? Me and ICT don't deserve all the credit. We appreciate it, and I do my best to try to get you guys in the right direction so you can walk on your own. That's the purpose, But you got to make sure that when you hit milestones eventually, when you succeed, when things are clear to you, you could say thanks, but make sure that you're giving yourself the credit you deserve, because we deserve it when we put in the work and do what we're supposed to do. We deserve to also feel confident and content in our own congratulations, our own celebrations of the actions that we take that turn into successful engagements. It's a lot of work. It's a lot of days where you look at the charts and it makes sense and it goes wrong. And then you start beating yourself up, having to get over that, having to work yourself through the times when it's confusing, when it seems impossible, because it is possible. It's just there's a battle we have to go through. There's a war within, the middle of our ears, the middle of our head that we have to overcome. And a lot of times in that world is where people fail. Not in reality, when it comes to trading and learning and all that. That's not generally where people fail. It's that world inside that makes you overtrade, that makes you not confident, that makes you feel like, oh, this is never going to work. It makes you feel anxious that, oh, well, can I trust this to be something reliable? Can I trust myself to make this reliable? Can I really depend on this to make an income to support my family? The doubts and all that stuff that's in the middle of your head. That's the battlefield that you really, really got to spend a lot of time on, and, part of being able to manage that has to do with, like I said, giving yourself credit. You want to be able to congratulate yourself, be thankful for those that may have helped you. I'm not saying be some douchebag, egotistical maniac, but, ICT has mentioned it, and that's something that when I heard it stuck with me too, because I give him a lot of praise, so does many other students, but he has a point when he's like, he doesn't take the risk. He's not setting the trade up. He's not making the sacrifices to go out and study. He did that for himself. And he's sharing how to make that as effective as possible for each and every one of us to kind of emulate, So you want to make sure that, you recognize that that's something you got to, really submit to, and accept. Because some people get successful and they feel, oh, well, I don't deserve success. As weird as that sounds, some people, if we've grown up in a harsh environment, all we see is failure and no one we know is successful. It's very easy to also hit milestones and think, man, do I deserve this? Is this going to last? Like the doubts start to creep in, especially in months like we just had in the summer months, And if you're not mentally aware of these things, this is from experience that I'm speaking this to you from, okay? Because I've had those moments where I'm like, do I really, I've had things that I regret in life. I've not seen a lot of successful people in my life. I've had a lot of things that I've had to go through in my life that left a lot of nasty mental habits that really mess with me. And if I don't stay fully aware, if I'm not 100% disciplined And if I don't do the things that has got me to where I'm at with my skill set, if I deviate and break the rules, those old habits, those old ways of thinking, those old things that used to plague me, both plague my happiness and plague my ability to be successful, will creep back in. So it's a constant management of our internal world that has to take place. And that's why I talk about it all the time. You know, every single Sunday, every single call that's live, I'm always mentioning something about it. You know, but again, it just goes back to the importance of, you really giving yourself credit, because being like encouraging to yourself, having a plan for these types of things and how you're going to manage success or failure, how you think, really getting to know yourself. It's a cliche thing that everybody says, but most people don't survive in this industry long enough because their expectations are so out of whack and their goals are just way too ridiculous for where they're at. They have those things plaguing them, so they don't even give themselves enough time to think about this stuff. Because eventually you'll get to the point where you got to start thinking about it, especially if there's a lot of money being made. You got to see what's ahead of you, and this is the type of stuff that you'll have to start considering. But you can do it right now. You can think about it right now. Start practicing being really, really good to yourself. Don't be, too delusional. You need to be delusional in some ways when you're first starting out, so you don't give up. Because the opportunity's there, and sometimes you'll take a loss and won't do it right. And it's very easy to fall into the negativity, because by default, our mind is engineered and wired in a way that's supposed to protect us from danger, heartbreak. That's why people, don't like rejection, and they won't talk to people because they're fearful. So they would lose the opportunity that they would have had if they would have opened up, because they're fearful of rejection. Well, losing a trade is being rejected, and some of us don't like rejection. If you have had a heartbreak in your life, if, maybe you had issues with your parents or another family member or a friend that you got rejected from, you may sit there and think, yeah, I overcame that, and I'm an adult and I don't really care. It's just a long time ago. But if you didn't deal with that properly, the market's going to pull stuff like that out of you, and it'll manifest in you making mistakes, not being disciplined, being overzealous, not following the rules, over leveraging, right? This type of stuff will creep in and you won't know. You'll think it's the system. I just got to get a different system. When in reality, the systems work. Every single concept I talk about, everything that ICT talks about, there's no question that they work. It just depends on if it works for you. Is this something you want to do? And you got to make sure you're contemplating these things whenever you're thinking like, all right, let me reflect on the analysis that I've done and the stuff that I'm doing that's resulting in negative results. What am I doing wrong? If you see the whole process is organized in the exact way that you were taught, and you're just making these certain mistakes, you then got to analyze what the hell is causing that mistake. If it's over trading, over leveraging, any of this undisciplined stuff, if you can observe that your system and things are in place in terms of engagements and how you get to an engagement and where price is going, so on and so forth, then the default you should run to is the psychological element. Okay? And if it's a psychological element, you got to dig even deeper into that. What's causing that? What did I go through in the past? Are the things that I think about that I sweep under the rug because of ego, or I don't want to think about it, or whatever the excuse will be? You have to really narrow that down. And this is a lot of work. This is aside from technicals. But this is what causes people to fail. This is more psychological than anything. And detaching from the outcome, okay, being confident in a trade, being able to execute and not really worry about what the result's going to be, just trusting your system and your model. It's going to be very, very dependent on that inner world that you got going on. Like when you execute a trade, are you thinking, oh, it's going to hit my stop? Is the first thing you think about, is this going to stop me out? I've talked about that specific aspect. You got to not think that. When you get in, you should expect a loss, right? Just expect it. Be like, all right, cool, whatever. And if you're following your plan, you should be good. But the next trade doesn't matter, right? When you're in a trade, think, okay, it could lose, but if it's going to go in my direction, which signals in price, given the candlestick delivery, what's supporting the idea? Even in the face of price maybe retracing back against you. Is it still supporting? If I was going to go bullish, maybe you executed up here. But if I was going to go bullish, what invalidates the trade? Right? These are things you got to think about. What supports the idea? What invalidates the idea? Why is my stop where I placed it? Is there a reason for it to be there? Do I have a reasonable stop loss? What got me into the trade? Where am I targeting? If I take a loss, it's just part of the game, right? All these things need to be flying through your head. But you got to, build your confidence by being organized, disciplined, having a lot of experience, hopping on calls like this so you can borrow the experience, learning about the psychological elements, the technical elements, and all the different things that we continuously mention, within every call. Every call is a little bit different. It talks about a lot of the same topics, a lot of the same process, but then there's some things that we got to talk about that are a little bit different. Like event horizon, I don't really talk about it a lot, but when it's there, right? And, my private group, they see some of the stuff that I don't generally use depending on the circumstances. It's not a be all end all. You don't even got to think about it, right? The event horizon or any of these other PD arrays. If you found some stuff that works already, you got to be proficient in what you do. And a good gauge to figure out if you have all the stuff that you need is going to be utilizing the 10 subjects that I have in the trading plan development section, both in my paid group and then also in the free Discord as well. You want to go take those 10 subjects under the trading plan development resources and try to see if you have a process for all 10 of them. A very detailed process. And then think about all the processes that you explain within those 10 categories. And think about how those things lead you to a decision. If you have any problems, if you're having mistakes, what can you put those mistakes under in regards to those 10 categories? So not only is that thing important the template important because it organizes your process, it forces you to identify whether you're actually equipped or not. It tells you whether you have different processes, but it also helps you identify your strengths and weaknesses. It has multiple uses. That's why I always talk about it. That's why I tell all my students, please fill it out. I don't care if you don't know what the hell's happening yet. Just fill it out. Okay? So then you can, I personally can know where you're at. I could just identify your strengths and weaknesses just by what you say within one of those 10 categories that I have. Does everything from bias and narrative to mindset and expectations to entry, to validation and validation. All that stuff is included. And it's got to be in a process with examples, And then again, if there's a problem that you have, like over trading and over leveraging, what does that fall into? Could be expectation problem, mindset, or just could be a lack of discipline. How can we knock those two things out? How can we make a plan or a process that can combat that every single day? What rules can we implement to stop that from ever happening again? And then if we make a rule and you don't follow it, there's a discipline problem, right? So then we're going to have to really hone in on that and figure out a process to alleviate that, right? So that's just a simple example of how I use that thing to not only does it help you identify problems, helps you stay organized, but it helps you truly have a physical testament to the fact that you do have everything you need. You don't need nothing else. Because everything that's, explained or identified through the 10 different categories in the trading plan development section. I'll pull it up here. It's a pretty nice equity curve if you ask me. It's been a pretty amazing year, to be honest. But yeah, this right here, this is what I'm talking about. Okay? Any problems you have, any doubts you have, any processes you have that you want to get better at or identify or know where they fit in the overall trader plan that you got going on for the business that you're creating, this right here organizes all of it. This thing is something that I used after the third year of me trading. More like more towards like the end of my second year. But this right here is what I formulated for myself to help me stay within the rails and prove to myself that I had everything that I needed. It wasn't money, making money and becoming profitable that proved it to me. It's my ability to describe this. You know why? Because me being able to describe each element in great detail with examples and where it fits in my overall process helped me know that this is not a one-off idea. You know, this isn't something that I got lucky doing. I have a full process that covers every single element of what it means to be a trader, at least for me, in my process, my business. And it's so organized to the point that if I forget something, or if I make a mistake and I feel like I just need a refresher, I can go back and look at all the different elements, you know, all the progression of how I got to this point, you know, and every problem that I've had has turned into a rule. You know, every rule has helped me become more disciplined, you know, and every discipline that I've been able to adopt as a result of my self-analysis and just good wisdom I've taken from other traders that are up higher than I am, it's resulted in what you've seen this year, which is high 80% strike rate when it comes to execution and almost 100% correct every single week with where price is going to go, which again, I've proven live, you know, so I'm constantly trying to get you guys to see what's gotten me to that point and what you need to focus on. But I need your attention, right? You know, to be able to hear these types of things, because it's not just one sentence answers. You know, it's deeper. It's not just one process that gets you there. At least it wasn't for me, you know, and I don't want to go off of luck. So there has to be a system that leads to consistent results. And that's what you see here. This is like a very rough breakdown of my plan, what's involved in my trading plan. And there's subcategories between all these, right? Related to different topics that relate to these categories. And I help my private group create this, you know, and break it down in detail, you know, for those that need it, right? Some don't need it, but some ask me and I hop on one-on-ones and we go through line by line, you know, subject by subject, where this fits, where does that fit? Some students ask me, where does this topic fit in this list of, you know, different categories? And, you know, I help them organize it that way as well. All right, so, can you tell me about the trailing drawdown with Apex in passing and the reason they deny payouts? They ask for logic behind each trade. So they don't necessarily ask for logic behind each trade. Mind you, I'm kind of new with Apex, so we're going to see what happens. I have heard stuff about them denying payouts. A lot of the time, I've heard from big YouTubers that have also kind of brought some of the issues to light. There's a 30% rule where you can't have any one like when you do a withdrawal. I mean, this is kind of the way that it is with Top Step too. No one trade can be over 30% of the total profit you gained when you go to withdraw whatever it is that you're trying to withdraw, right? So, no, like if you have like $1,000, you know, the way that you get to that $1,000 profit when you're getting ready to take a withdrawal is very important, right? So if you have like $1,000, you cannot have anything go over $300 in terms of profit when you look to withdraw. Otherwise, they're going to deny you and make you wait and continue to trade until you can prove that you can follow that rule, right? You also can't it just promotes you to not over leverage. You know, some people hate that rule. I necessarily don't like it, right? I don't like how restrictive all these prop firms are, but that's just kind of what you got to deal with if you don't have a personal account or funds to have a personal account. You got to be extra disciplined, extra know what the hell's going on. And it kind of helps you be better, but then again, you also got to remember that you're just doing it to make money, right? To build up an account slowly, right? Take a withdrawal and just keep adding it. You know, get some money from your job, add it to an account. So basically, even if they deny you, you got to trade more. Yeah. They don't lose your account because of that. The trailing drawdown, though, when you're basically, say you are. Oh yeah, it makes it. Yeah, of course, of course. If you're trying to make these large, massive runs with over leveraging, it's absolutely difficult. Trailing drawdown, I hate it because you don't want to have the drawdown following you. But then again, it's just again to promote you not to overtrade and over leverage. So if you're following my rules, the things that we talk about, it'll never be a problem. None of the rules in prop firms will be a problem. But if you're trying to over leverage and quickly, they're trying to make it preventable in terms of somebody getting to the funded accounts quickly and just gambling, getting payouts, and then moving on about their days. Right, but the trailing drawdown is basically like if you're, taking a trade and you make like $1,000 profit, and say you had like, God, how can I explain this in like a very easy way? Well, all right, how about this? Let's kind of just go over here. So say you had like 100K account. I'll just give you like what's going on with the trailing drawdown, because basically it's following you up. So if you have like a 100K account and your drawdown is $3,000, okay, you can't go to 97,000 or 97,000. That's your overall drawdown. Start at your starting point. But say you went up to 1,000 or 101,000, right? It'll basically trail the drawdown up, the drawdown limit that you're afforded, right? So this would then become, instead of 97,000, because it's trailing, right? You're now up 1,000. You would now keep the $3,000 risk that you have available, but now your max loss can only be to 98,000. You see how it's just moving with the profit you make? That's what they mean by trailing drawdown. Initially, you started with 97,000 if you have a 100K account, given the 3K amount that you're offered. But it's going to continue to trail as you keep making money. Even if you don't book the profits. Yeah, they do. I think some of them do it with unrealized trailing drawdown. Some do it at the close. Remember when you close the trade? That's when the trailing drawdown continues to follow you. But some do it with unrealized. I can't remember if the unrealized drawdown is with Apex. But again, if you're following the ways that we trade, the way that we talk about doing things, and you're staying within the 30% rule, basically just aim for $200 to $300 a trade and get out. Don't look to make more, right? If you do that, you follow those two things, you won't have any problems. But if you're trying to get in here and get a payout that's on the leaderboard and try to pass a funded account in 5 days and do all this stupid shit that people try to promote because it's catchy and it keeps your attention, you're going to have to deal with all these problems. You're going to be face to face with all the rules that seem unfair if that's the way that you're trying to do things. It makes it more difficult for those types of traders. It's a filter process. That's why they have it. They want to filter out those kinds of traders. And if you were them, given the fact that we know how the trading industry is, how these people are, they're gamblers. They want to get rich tomorrow. Given the fact that that's the case, they don't want to have to deal with that. So how do you weed those people out? You give these types of rules that prevent that from ever even being able to take place, or puts them in a hole if they try to accomplish things in that way. Right? So if you just take my advice, if you're in a prop firm account, don't expect to pass it in a week or a month. Give yourself 3 months to pass the funded account. Try to target $200. If you can get more, great. Remember, there's actually something else that if you are considering Apex, which I encourage you to do,
From what I've seen, it's amazing. You hear a lot of horror stories, but a lot of it has to do with nobody understanding the rules. Like they don't understand the rules, or they're not disciplined, right? Or their objectives are just ridiculous, and their mindset is just not. You can't trade a prop firm account like you have a personal account and access to like the whole 100K account. Like you can't do that. They have the rules that are trying to prevent people from, being able to just do whatever they want. So you got to trade within the little bubble that they put you in, and there's a proper way to do it. And like I said, there's it's not really too hard to do. You just have to adjust your thinking a little bit. Let me see, where the hell was the video? Let me see if I can find this guy that explained it amazingly. I don't know if it was that guy. Oh, here it is. This guy right here. Let me actually post that. So that guy actually, he explains it in such a good way. He explains it in such a good way. And I highly encourage you guys to go look into him. Here, I'll post it in the free group. Let me see. Oh, whoops. How the hell do I get out of this? Disconnect. There we go. Yeah, can you guys still hear me? Sorry, I accidentally pushed general. Basically just hopped on a... what is that? The voice chat? I didn't even know I had that thing there. It's a voice chat. We could hop on that sometimes in the free group if you guys want. Maybe I could do it every, I don't know, maybe Tuesday, Wednesday, at the end of the day maybe. But yeah, this guy is a really good one to watch. He explained it the best. I dug into it because I've never been on Apex, so I was already considering moving because I don't like Top Step. They're just too restrictive, and long-term wise, like they discourage you from taking withdrawals unless you're gonna grow the account. I don't want to grow the account in a funded account. I can't, some people can do that if you want to, and eventually you could withdraw all the money, but I'd rather just withdraw it, put it in my personal, withdraw, put it in my personal, withdraw, put it in my personal, withdraw, pay bills, put it in my personal. You know what I mean? Like I just like that better. That's me though, obviously. Maybe you got a different opinion. But that's how I feel about it. All right, so let me see. The rules are there because they want certain yeah, they want certain types of traders because they want to actually fund you. Because companies are now starting to give you real funded capital, and they want to make sure their money's safe. They copy traders, right? If they got like good traders that they're seeing take trades, they want to get behind them and they want to make money too. They're a business. We're all our own business entity, so they're no different. Brokers are no different. So just some stuff to keep in mind, you guys. Okay, and definitely go watch that video if you guys are considering the swap from whatever firm you're at to Apex. And remember, when you go to Apex, you're going to see that it's hella expensive. It's like $300 a month for some of them. For 50K, I think it's like 100 something a month. But there's always some type of discount code. And the discount code you use would not just be for 1 month. It's for the entire month. For the entire span of you taking the evaluation. And the greatest thing about Apex too, which is not like these other the other discount codes for some of these companies, one discount code can basically be used for up to like 20 different accounts that you can buy all at once. So you don't just use the discount code once for one purchase. You could use it across a basket of purchases. So you can buy like 5 Apex accounts instead of, $300 per account. You could buy them for, 6, 8, for like 300. You can get 6 accounts, right? Or 5 accounts, right? So you don't got to go that big, right? You could keep it small. Like for one Top Step account, you can have 2 Apex accounts, right? You could do them both at once. Bigger bang for your buck. You know what I mean? So yeah, it's something to think about, right? Or you can go the 50K route and get, 40, 80. For $100, you can get like four 50K accounts, or close to it. 3 or 4 50K accounts, right? So just however you want to manage it, right? But regardless of which one you use, you want to make sure that you stay within the 30% rule, and you could just simply use one contract, maybe 3 micro contracts, 4 micros to aim for $200-$400 a day, and just get out and stack those wins. And if you're consistent, if you know what you're doing, if you're following what we do, and you're finding opportunities as consistently as we do, and you're able to execute and time it properly over and over and over again, 300 times like a month. I mean, that's a decent amount added to the bottom line to attack the goal. But again, you don't want to. That's reliable trading. That's not gambler mentality. I'm going to get rich and buy a Lambo tomorrow. This is an income. This is a business, and I'm a professional. Okay, you'll get more here and there, right? You'll catch a runner, but that's great. That could just be an added amount. And when you go to withdraw, no one profitable day can be 30% of your entire profit, right? That you're trying to withdraw, right? So if you make like $1,000, there can't be one day that basically gave you over $300. You have to have under the 300 if you're withdrawing 1,000. Now, obviously, that number changes as the profits get bigger, right? The 30% doesn't change, but the number itself does, right? Because like 10,000, 30% is $3,000. So if you have 10,000 profit, if you're going to withdraw something from that profit you made, you can't have any one trade or I can't remember if it's one trade or one trading day that was profitable above $3,000. So you could withdraw or if you have like even a $2,600 gain, that's under the 30% of 10,000 that you made. So you would then be within the rules, right? So it's not too crazy, but when you have a small amount and you're trying to just withdraw continuously, obviously they kind of discourage that a little bit, they discourage you making too much too quickly and then withdrawing, as a result of that. I think it's part of because they want to kind of make sure you're consistent, but they also don't want to have to keep paying you out if you're making these huge runs. They want you to spend time trading. They want real traders. Like I think Tony said, they want certain traders to be part of their shtick, right? But yeah, so again, just make sure you, we'll come back to the technicals now. Hopefully all that stuff we just talked about makes sense and has been helpful to you guys. But yeah, so looking at the markets just, one last time, right? We are looking for the bonds, trying to see if they're going to want to go higher as a result of the rate cut that's coming. They may look to dig a little deeper because we're ending this month, and the next quarter starts in September, next month basically. So, a lot of the volatility is probably going to reside within that if it is going to look to go higher. We do have SMT at the lows, like I mentioned, so there's reasons we're going to use to try to justify continued runs to the buy side eventually. We're still in consolidation now. It's the end of the month, so again, we're going to go day by day and see what it wants to reach for. We're not going to look at any of this upper or lower area, like the extremes, because we already have this. Let's actually go to the monthly chart. Current month, previous month, high and low, right? Current month, high and low. And then we got this month's high and low too. Or this, yeah. So we have these near-term liquidity pools. And if anything, it may just look to work within the previous month, right? Or it may sweep above the high here, maybe. I don't think so. I think it's going to stay within this. I think the month's going to end like this. Okay, but you want to map your monthly high, monthly low, previous month's high and low, and the close proximity highs and lows relative to this time frame. Close proximity PD arrays. We've been talking about this monthly fair value gap. We'll see if price wants to stay below it or if it wants to finally displace above it. It's going to take time because it's a monthly chart and there's news coming, the federal rate cut that's coming. So it's probably not going to make any big move up until we figure out what's going to happen around there. So we may just continue to be sideways. Same thing for the bond yields. You know, we're kind of just in a range here. It's going to break out at some point, and it's going to need a news event because higher time frame moves happen as a result of the news announcements, because the news acts as macros for the higher time frame delivery to or away from liquidity or outside of a range. Okay, so with that being said, DXY, it's still bearish. Wick being respected, the breaker, order block here, right? Consecutive up candles. Price came back into it. Hit the low. We got this wick. It's respecting that. Nothing tells us that price is going to stop going lower. Same thing here. Nothing's telling us that price is going to stop going lower. Okay, wick, 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 midpoint, midpoint, order block, midpoint, rejection, rejection, rejection. All of that justifies the down movement. So what does that mean? Currencies, EU and GU, and the indices should go higher. Then you add on the thing that we talked about earlier when it comes to the federal fund rate getting cut potentially, and the history of what's happened. And 100% of the time, the last 20 times when price has been at all-time highs on the indices and there was a rate cut, the next 6 to 12 months ended bullish. So it favored buy-side delivery as a result of this announcement. And you could see the other assets supporting that potential assumption if this continues to push DXY lower. Okay, so it makes sense how we can trust this analysis, right? The narrative. And we'll see if that wants to continue based on, you know, what price does moving forward to end this month and then going into the next week as well, right? And finishing the month going into September. Okay, so yeah, with that being said, again, you got to do the same thing I just talked about on the bonds, right? You get the monthly high, monthly low, you know, previous week's high and low, month, and then the previous day's highs and lows. In this case, we got Friday. Going into Monday's trading, I just want to make sure I remind you guys that Monday's trading, you want to make sure you're observing the list of liquidity pools that we talk about in the liquidity mapping principles, which has served us well. You know, students like Tony and Mike and everyone that's been here for a while have been seeing this amazingly work and keeps us really grounded in what's happening. But you want to find Friday's high and low, and that's going to be your first liquidity point or your first liquidity target, right? The high or the low, depending on what it's going to do. So the low down here is going to be more accessible, right? It's probably going to open up, run higher here, maybe continue to try to purge out the lows, because now we've rejected from this wick as well, right? Which is this encapsulated price delivery here. So, you know, from this time frame, displacement, to the weekly time frame, wicks are being respected, PD arrays bearish are being respected, lows are being violated. Up to the monthly chart where bearish PD arrays are still holding price, and there's no reason the price has shown us yet to want to turn around. So we'll stick to the narrative being bearish, anticipate that the bonds are going to have a rate cut, which should send this higher, which would push the DXY lower. And then that would also send these higher. You could see that the currencies are reaching into their quarterly bullish order block. So the quarter has been used. So the next quarter that comes, which is next month, it's ironic that this is leading us into the next month after price has now returned into a quarterly bullish order block. This may result in the next quarter being massively bullish. Seasonally, that makes sense. Fundamentally, that's making sense because of the rate announcement and what's happened prior. So you can see things start to align perfectly, not only technically, but fundamentally. and intermarket relationship wise, and it just makes sense. Hopefully, right? Makes sense to us, hopefully. To me, it makes sense 100%. So, and I mean, it's kind of been pretty accurate this year. I've done similar things like this with other months and news events. This is the first time I'm actually bringing this up, though, in terms of, I've brought it up, how to merge fundamentals and news and things together. Hopefully today has been an easy explanation to kind of give you a forecast vision of where price should go and why it makes sense. Aside from, it's just an order block, so I'm just going to believe it because it's just an order block. Like, that doesn't do anything, right? What part of the order block's to be respected if we're going to continue? Midpoint. Are we inside of another PD rate that also supports it? Yeah, fair value gap. Oh, well, it's not necessarily fair value gap. Looks like it might be trying to trigger an immediate rebalance too. It should not have to close this fully in, though, for it to want to run. And if it is going to run higher, what do we see, right? We got relative equal highs up here. Another high up here, so we got relatively equal highs here too. Relatively equal highs here. This high and this high, right? They left that available. And now we also have something very, very important that's led this to continue to trust buy side, which has been this overlapping fair value gap. That has been presented in the form of a balanced price range. And what has happened? Prices continue to keep going higher. So we're going to stick to that. And we're going to use this bullish order block here on the quarterly chart to keep our higher time frame perspective bullish, as long as DXY stays bearish on the higher time frame as well. And we'll see what the rate cuts do and see if it continues to really shock this and send it even further, maybe eventually getting to this wick and this high up here. Going down to the monthly chart, we could see how this was simply a retracement to a breaker. High, low, higher, high, up candle, drag that over, simply just retraced. And we see this wick here, price respected the wick. All right, and it's just continuing to march. We got relative equal highs up here. Like I mentioned, we have potentially relative equal highs here. So that's good. So if price can displace and get above this, that turns into an order block as well. And you can see we're going into a new quarter that's expected to be bullish. This whole quarter basically delivered lower, and now we're coming off the low here, creating a wick and a bearish candle that simply just pulled down to this quarterly bullish order block. If this was the 5-minute, this would be where you would want to expect price to move higher, would you not? Is it any different what's happening here versus if this was the 5-minute chart? No. So this order block, if this was the execution area, and this is what we're going to go off of to send price higher, even though this is a 3-month chart and it's going to take a while to print this, and a lot could happen, this is ideally what we would want to try to position ourselves with, right? Take an execution here, and then midpoint here would be the validation level. Okay? And so we're going to look at this in a very similar way, right? We got the breaker, and that's going to position us to try to target the high. And then once we get up above here, we set the stage for these equal highs and beyond, using this quarterly order block as the position for the next quarter, right? So we're going to use this quarter, which has been bearish, to possibly set up the next quarter off the heels of a rate cut that should skyrocket price because of it having a 100% strike rate when that's happened at all-time highs. It's sent foreign currencies and the indices higher. And then once it gets up above here, we'll just continue to march towards that direction. So we're favoring buy side for the foreseeable future until proven otherwise, right? And we'll see if we can get up above here. But first and foremost, we got to take out this high and the relative equal highs here and stay above this breaker, okay? Things change if we break through these levels, right? But that's not the case. So we're going to continue to hold on to price continuing to want to march to the buy side. We also have an inversion for a value gap here. Reused it. And just more reason why this level held up in price. Okay, and so lower time frames will have to agree with that. Any lower time frame observations will have to be within the context of that. Okay, and there's no ifs, ands, or buts. Like, that's just what it is. And if it goes against it, you got to think counter trend trading. So you got to cut your risk and change your risk accordingly, or just don't take a trade at all and wait till it kicks back in line with what we're talking about here with price going higher. Unless it was to break down and start to disrespect things which we will be ready for if it breaks below these levels. Okay? But that's contingency plan for the higher time frame. We're not going to focus there. Our focus is buy side delivery. All right, so hopefully that's simple enough, and we'll talk about if the data ranges and whatnot later when September comes into play. Okay, and then we'll do the cast forward, look back, 20, 40, 60, and talk about other things. But for now, hopefully this is enough for you to go off of going into next week, and we'll see what happens once we get into next week. Okay. So, and then one more run through in terms of the indices. Look at the monthly chart. We see that it's, just took out the previous month's high. You see why every month you open up with, because this candle wasn't always up here. When this month opened up, this high and this low were available for it to be targeted. What did price do throughout the whole month? It targeted previous month's high. Same with this. Same with this. So what do you think is going to happen when the next month comes out? We're going to mark off this previous month's high and low, and this low too, just in case, in the fair value gap, just in case. And then we'll see what happens if price wants to continue to seek the buy side, and we'll keep pressing that, right? And then every time frame you go down to, like the weekly, you'll do the same thing. We got the previous week's high and low. We don't need to mark the low as much because it's already delivered through it. We got the most recent previous high on the week and low. We got this order block. So we got the midpoint of this we'll measure out, like pretty much we talked about. And, all of this is justified by what we just talked about throughout the day with the interest rate anticipation getting cut at all-time highs, which would result in buy side. DXY still has an overwhelmingly bearish overall price action or price structure. The bonds look like they may want to break out and go higher. The yields could turn around and go lower. Foreign currencies look like they are going to continue going higher off that quarterly rejection to the quarterly order block. That being here. So it looks like we have we have seasonality that's bullish going into the September, August, September, October, November time period. And then Christmas rally as well. So it's a lot of bullishness taking place. September may be a little skeptical. There is a rate announcement. So we'll see. It should start to open up towards the later portions of September, maybe the second week of September. Potentially, right? The week before, week of, and week after, a quarterly swap from third quarter, say, to fourth quarter. The week before, week of, and week after is used as like a holiday, right? Like similarly to a holiday, like the day before, day of, day after a holiday. Those are low probability. But with a quarterly perspective, the week before, week of, and week after the quarterly swap from one quarter to the next, you want to look at those as a high resistance, low probability condition. So you got to lower your risk. You got to keep your risk managed properly. You're not going to go in there gunslinging, So, there will be times for that to take place, right? After, right? The week before, week of, week after the quarterly swap, okay? Doesn't mean there won't be opportunities. Doesn't mean that we're not going to trade. Doesn't mean we're not going to look for things and execute. It just means that's the risk profile we're going to have, okay? So hopefully that's understandable. And so again, all that stuff being said, right, we're pulling down to this. Makes sense that the uncertainty that was expressed, because if you see this huge drop that took place, I made it pretty clear that I didn't really understand what they were using to push price so aggressively. There was no news when the drop took place. Okay, but if we come over here, we could see exactly what they used as the excuse. Divided Fed worried about tariffs and inflation. Federal fund rate or Federal Reserve officials are worried about the July meeting, labor market. So there's fear. So this happened 10 hours before last Thursday. So that drop took place before this was even announced. Okay? And so then this was announced, and then all hell broke loose to the downside, right? Reaching into that weekly bullish order block, which again, we have so much stuff that we've overlapped today that justifies and removes the fogginess within the sideways delivery that we've seen, and the lack of news that led to this decline, right? It makes it clear this was all manipulation. The Fed's talking about fear, their uncertainty, all-time highs, the rate cut, or maybe not a rate cut. They're confusing everybody, But we're very clear as far as what we're trying to do. Price tells you everything, and you just use fundamentals to then justify what price is actually doing. And price is being justified by what the fundamentals are telling us that price is going to go higher. And if price doesn't want to go higher, we're going to close below this order block, and then it'll target these relative equal lows, and we'll be simply headed to the fair value gap, and we'll be able to adjust if that's something that needs to happen. Right now, that's not on the table until it's proven by closing below this middle portion of this order block, getting closer down to these equal lows. Okay? So yeah, that's pretty much everything that I wanted to talk about today. So yeah, hopefully I was able to answer a lot of your guys' questions, basically reinforce everything that we've talked about. Again, if you guys get value from the content, definitely like the video, subscribe to the channel. I just figured that I should, close out the call by basically giving a review. 28 minutes was able to explain that. Basically everything that we've went over today. So yeah, hopefully you guys have a happy Sunday. God bless you guys. Right? Appreciate you for hopping on. Again, don't forget to like the video, subscribe to the channel, share with some friends if you think they can get value from the content we provide, or if they could provide value, maybe they're elite traders, pretty good with what they do within the ICT realm of things. Definitely bring them over so they could be part of the family and the value. Right? So yeah, hopefully everything made sense. Hopefully I got everything clear as far as what we're anticipating, how we're going to go into today, how to treat the coming week, how to treat what's coming up ahead of us, and what your risk profile should look like. I advise you to take my advice. Hopefully you take my advice. Maybe you don't, and maybe you get hurt by that. Hopefully not. But yeah, we'll see what price wants to do as a result of these things that we've discussed today. Okay. So yeah, as always, if you guys have any questions, let me know in the comments, in my DMs. More than happy to help you out, or when I get a chance to. Any of you in my private group, don't forget to set up a one-on-one today. I'm free all day, so if you need something, let me know. We can hop on. But yeah, other than that, again, God bless you guys. Thanks for hopping on. Hope you have a wonderful rest of your day, and I will catch y'all on the next one.